My name is Richard Tunney from Key Capital, IMAP's partner in Ireland.
And I'm Andrew Kemper from Capital West Partners, IMAP's partner in Canada. And today we're here to talk about the 4 factors impacting M&A in the financial services in 2024. The first one we'll probably talk about is the impact and the appetite for private equity in the financial services.
We've seen significant increase in private equity appetite to build a portfolio in financial services and also private equity funds specifically aimed at the financial services sector. And we see that continuing. There's a lot of factors within the financial services sector that are particularly attractive to PE, not least the cash generation available, but also the barriers to entry, particularly in the areas of regulation and market penetration.
Yeah, we're seeing the same thing in North America, I'd say. A large war chest, obviously. They have multi-billions of dollars of capital that they're looking to invest in. They like the idea of the low capex cash generation of those businesses and the ability to fund a large portion on those acquisitions in debt, not having to put their own equity into it. So it's very attractive to them.
Yeah, and I think something, and it's probably leading into the second point, is when you dig into that a little bit further, insurance has been particularly attractive. And when you look at the profile of an insurance business, very capital light, significant cash generation, customers that are retained over multiple years, all of those factors are particularly attractive for a private equity investor trying to underwrite an investment case.
Yeah, and we've seen in North America especially, we've seen a trend, like an ongoing trend of both strategics and private equity groups investing in insurance brokerage. It's actually interesting that in 2023, the volume of deals was down about 20%, but it's still 600 deals that got done in the sector and about 20 billion in value with, obviously one big deal, the Aon takeover of National Financial Partners, which was almost 13 billion itself. But we're seeing a lot of activity. I think we're still going to see that trend. Valuations are remaining strong, many at plus 10 times EBITDA. So I think it's going to continue. And a lot of those brokerages are, they're not only buying property and casualty insurance industries, but they're kind of adding on and going into group benefits and life insurance and different sectors that they maybe hadn't touched before. So that's obviously a positive thing. Maybe the next one we'll talk about is regulations and how that's kind of impacting and driving some M&A in the sector.
Yeah, and I think we've certainly seen that in conversations we've been having over the last 12 months. The regulatory burden, particularly in Ireland and the UK, but across the EU, is continuing to grow, and we've seen non-bank lending and peer-to-peer lending in the last 12 months has become a regulated business now across Europe, and the burden that places on smaller businesses that are required to scale up in terms of their compliance team and risk management, that has really impacted on their net margins. And we see that as a big driver of consolidation.
Yeah, and in North America, it's a pretty well-established regulatory environment. Obviously, with the SEC in the U.S. and in Canada, the financial services body that regulates that there. Our lending environment is so different. I think in Canada, probably 95% of all bank loans or all loans to businesses on M&A and acquisitions are done by the 5 largest banks. There isn't a huge private debt market, but it is growing.
The point I made previously was quite negative in terms of regulation and the cost burden. The positive to that from an M&A perspective is that it creates a standard and a level playing field, which makes it more easy for larger institutions and banks in particular to look at some of these smaller non-bank lenders that have been established and it gives them some reassurance that there is a certain minimum standard and that they're meeting the regulation and that they're in compliance with regulation. So it does make M&A a little bit easier for trade buyers who are historically have been nervous around regulation and dealing with customers and anything they may inherit through an acquisition in the space.
Mm-hmm. Why don't we talk about too the obviously these businesses generate a lot of cash, and one of the things that will drive M&A is the fact that they have cash inside the strategics, so inside the banks, inside the wealth managers, and what they do with that.
Yeah, I think it's quite an interesting point, and it's a dynamic that's quite new, certainly in Ireland and the UK and across European banks more generally. The interest rate environment has been transformative for their cash generation over the last 18 months, 24 months. And certainly in Irish and UK banks, the net interest margin has just grown exponentially, which is a great problem in the short term. And we've seen banks returning capital and some of the Irish banks doing directed buybacks to remove some state ownership from the share register. But that will start to bring its own problems in due course. Shareholders will want to see a return on capital. They're not going to be happy with the cash just sitting there in perpetuity. So the banks are going to start to feel a little bit of pressure from shareholders to either return that cash by way of dividend or other capital distribution, or to use it for an M&A strategy. And that's going to be quite a new thing, certainly in Ireland and the UK.
Yeah, and in Canada, we've always had kind of pretty strong banks and a very regulated environment in terms of their risk-adjusted capital that the banks have to maintain inside the corporations. But they are also generating cash to the point where people are looking for them to do something. Interesting enough is with quite consolidated 5 large banks kind of having the largest market share in Canada, you'd think that would be a competition issue, but we just had the completion of a merger where RBC, the largest bank in Canada, bought the number 6 bank in Canada, HSBC, and it's kind of that shows that there's less concern about that. There's enough competition in the market, and there's still opportunities for those banks to do M&A.
Yeah, it's quite interesting because in the Irish market we'd see ourselves having four banks that are really operating the market. So when you look at the scale of the Canadian market versus the Irish market, and 4 versus 5, it's not that dissimilar for obviously a significantly larger market. So I think those 4 points would reinforce our view that the outlook is pretty strong for the financial services sector over the next 12-24 months from an M&A perspective. I think within IMAP we've successfully closed 68 transactions in the financial services sector over the last 5 years, and certainly from a key capital perspective, and I think from speaking to colleagues around IMAP over the last few weeks, there's strong confidence that we'll continue to see a good flow of deals in the financial services sector.